Hi there, my name's Jason Hurley and I'm here to give you some helpful tips on buying your first home, or even if it's not your first, buying any home. Firstly, best thing to do is work out realistically how much you can afford. You can do this yourself. Now this is just a rough guide, I'm not giving any financial advice here, but as an independent mortgage broker, I deal with many lenders, and I'm finding at the moment that the maximum income multiple that lenders will go to is about 5 times your gross annual income minus any monthly deductions that you might have. So if you have monthly payments to creditors and secured loans, whatever, any outstanding credit, take your monthly payment, times it by 12, deduct this from your gross annual income and multiply it by 5, and that will give you an absolute maximum that you'll be able to borrow. Now if you're self-employed, you will need to have been self-employed for a year at least, and you'll need a year's account. Sometimes you can get by with an accountant's letter, but it's better to have the actual year's accounts. Okay, going on from that, self-certification mortgage, you can't really get a self-certification mortgage at the moment. They're very few and far between. If you do manage to find one, to be honest, you will actually need the account. Now, moving on to deposit, you need to have a deposit to get the best rates at the moment. You need in the region of about a 40% deposit. You can get the equivalent of the old sort of 10% deposit is about 25% deposit that you need now to achieve the sort of semi-best rates. You can get away with a 10% deposit. Any less than that, your rates are going to be extortionate if you can find a lender, and to be honest, there's very, very few products that require less than a 10% deposit. Also, for your own peace of mind, if house prices do drop, that 10% deposit could get smaller and smaller, and you might find when it comes to remortgaging in the future, you might not be able to, because the loan to value is too high. Right, so going on from there, just to work out the loan to value if you wanted to, it's a fairly simple calculation. Basically, it's a purchase price minus the deposit divided by the purchase price, and that will give you the maximum loan to value that you're working to. So if that figure is in the region of 75%, you're going to have access to a huge amount of rates, which will be beneficial to you. But as I said, you can get away with 10%. Right, so when you've worked out you also need to think of a monthly budget, a monthly mortgage budget that you're prepared to spend. It's also good to get life cover, mortgage protection. If you get this on a decreasing term, you might find you're not paying too much money. You'd be quite surprised at the monthly payments. Again, seek an independent financial advisor about that. So right, when you know your maximum mortgage payment that you're looking to pay each month, when you've worked out your maximum borrowing, given the calculation I gave you at the beginning, and when you have added your deposit to that figure and worked out the maximum purchase price that you can afford, you can do a double check to make sure you can afford everything. If you go on to the website that's here, and you can go onto the mortgage calculator, you can put in the mortgage amount, put in the purchase price, put in a rate of, say, 4 or 5% at the moment, will give you a realistic monthly figure. Put in the amount of years you want the mortgage over, and it will tell you what your interest only mortgage payment would be and what your repayment mortgage payment would be. Make sure that that's within your monthly budget, and yeah, good to go. Now when it actually comes to buying a property, it's good to have your mortgage agreed in principle first by the mortgage lender. They can, if you seek independent financial advice, or even if you decided to go from bank to building society, it's pretty much the same thing. You can get an agreement in principle from a lender. Now obviously the benefit of going to an independent financial advisor or independent mortgage advisor is that they can search the whole market for you if they have whole market access, which we do. They can search it for you. Most mortgage lenders, including ourselves, don't charge a fee. I mean, we have the option to. We give you the option to pay a fee if you wish, but we get paid by a procuration fee from the lender. But then also, I mean, if it's in some cases, and we can discuss this with you, it might be more beneficial for you. It might work out better. You might prefer to keep our commission, and you pay us a fee for doing the financial work for looking for your product for you. Right, so when you've got your agreement in principle, you can go look at the houses. You'll know what mortgage you've been accepted at. You'll have a lender in mind, and it'll also put you in a strong buying position if you've got an agreement in principle, because you'll be able to give it to the vendor or give it to the estate agent and say, well, look, I've got my mortgage agreed in principle for this amount with this lender. Here's my bank statement showing my deposit. Put the two together and I can afford to buy your house. I hope this has been helpful. As I said, I haven't been given financial advice on this, it's just a guide. I am an independent financial advisor though, so if you would like independent financial advice, please give me a call. My details are on here and phone number will be at the end of the slide. Thanks for listening. Bye bye.